All right, this is your Altos Research report for the U.S. real estate market over the Labor Day 2020 weekend. I'm Mike Simonson. I'm the founder CEO of Altos. If you're new to Altos Research, we track the entire U.S. real estate market, every home for sale, all the pricing, supply and demand metrics, and we hand it to you in real time. Our realtor clients use our data with their home buyers and sellers to help them make the most confident, informed decisions possible. Our enterprise clients use this data in their applications and their modeling to make sure they understand what is happening right now in the US real estate market. At our website, altosresearch.com, you can actually run a free report to get your local data every week. We do these videos every Monday to interpret the latest data for you, since the headlines and the traditional data or the home price index reports are often lagging, several months old by the time they get to you. So if you want to see these data, these videos, hit the subscribe button. Okay, let us look at this week's data. So as you know by now, the market continues to be on fire. The median price of single family home in the US this week is $354,000. That ticked up a fraction from last week and is actually flat for multiple weeks at this elevated plateau, 9% higher than last year at this time. We had no price pullback in August of this year as we normally would. So our year-over-year comparisons are just super strong. And we'll stay at this 8 to 9% year-over-year gains until the end of October. And then we'll see if this market's gains get some sanity or some normalcy over the holidays when things would normally back off. And frankly, I hope so. As it just doesn't seem healthy to be this intense for so long. As we've been discussing for a bunch of weeks now, the price of new listings, this is the leading indicator of the market. It's held up incredibly high all summer long. That's the blue line on this chart here. The new listings are at 320K right now. And because this market leads pricing as a whole, we know that the market isn't going to pull back for at least the next couple of months. As we've been discussing in the data over the last few months, our price mania right now is driven by both supply and demand. There were only 70,000 new listings this week and significantly more buyers. So our total inventory fell by 1.3% or so week over week to 584,000 homes. Like this year, this is the red line on the chart here. And it continues to defy logic. But this is where we are. So resumed our decline for the week. And then normally October, November, December, you'd see lots fewer new listings. And so the market will continue to decline through the end of the year, the total number of homes available. This week, I thought we would look into two more sort of nuanced ways to understand the supply and demand dynamics in the market. The first of these is a percentage of the active listings which have taken a recent price cut. So we use this metric as an indicator of organic levels of demand in the market. And you can see this price reductions they're very seasonal. So homes get listed in the first and second quarter, and then the longer they sit, the more likely they are to take a price cut. By October, if your house is still on the market, Now you really start thinking about dropping the price a little bit to try to get the deal done before the holidays. Then the market resets in January. So in years when we have greater demand, the numbers that need to take a price cut are lower. And as when demand is weaker, more price cuts happen. Right now, we are at 25.8% with price cuts. And this is at a time of year when we'd be normally at 35%. So here's what's going on. Sellers know that the homes don't need a price cut right now. Demand is everywhere. Therefore, the transactions that are going to get done in October and November are going to stay significantly priced higher than last year. The headlines, of course, won't start reflecting this strength until they show up in like December and January, but you can see it in the data right now. So let's then look at a different view. What do we do? What do we learn if we look at the inverse of that? So the percent of homes, percent of the listings that have actually had price increases. This is a really fascinating number. Prices increase when investor flips, you buy a property, you do a little work, and then you resell it quickly at a higher price. Increases are sometimes like a marketing tactic, a sales tactic to price, maybe price a property in the range with the greatest shopper demand. Increases are also the domain of the iBuyers. These are the big institutions with cash. They come in, they give sellers fast cash for a little bit of a discount, and then they own the inventory and now resell the property. So on the right side of this chart, you can see this little, I've highlighted a little blue line there, the iBuyers like Zillow and Opendoor. In March, they pulled out of the market, boom, instantaneously. And so there was this big dip in March and April of price reduction. So fewer homes that were being listed that had had a recent price hike. Off like a light switch. But those institutions are back in full force right now, as are the individual investors. So in a market where home prices are climbing month over month and they're 9% higher than like last year, flips are a very tempting strategy. So we're seeing it all over the place right now. In local markets with a strong iBuyer market share, these are places like Gwinnett County in Georgia or suburban Phoenix. You can see the price increase number is at like 13%, 10 or 13% in those kind of strong iBuyer and investor markets. Interestingly, on this one, you can see that stretch of 2018 that I highlighted in here too. So in 2018, as interest rates rose, demand backed way off and price increases fell that whole year. So right now, price increases are at the highest they've been since the bubble burst, like 2007. I will be bubble apprehensive about like unhealthy speculation levels. If price increases, for example, climb to like the 10% range nationally. So in local markets, they are there now. And that's like, those are, like I mentioned, heavy iBuyer markets, heavy investor markets. And so that's going to be part of that dynamic. But nationally, if they climb towards that range, that's going to be like a lot of speculation and feel scary to me. Right now, it's sort of just another bullish pricing signal for the future. So that's the data this week. As always, visit altosresearch.com for the full details, latest data. Subscribe to the channel here, hit that little subscribe button to make sure you get these videos and any others each week. And also post the questions in the comments if you have a view on the market that you'd like us to explore. Thank you as always. More next week.